Equity News on Equity Access, your daily insight on stock market developments and of developments in the Zimbabwean economy. A fantastic evening it is to you. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. Well, it was an unusual day at Parliament today, in fact this afternoon, as the Finance Minister, Professor Mthuli Ncube, was quizzed by parliamentarians with issues pertaining to the economy. Parliamentarians lamenting the worsening economic situation and putting Professor Mthuli Ncube to the test. Among the concerns raised by the parliamentarians was the issue to do with the government surplus that the Finance Minister has repeatedly celebrated in recent weeks. At the same time, the Finance Minister took to the podium to respond to these questions. Let's have a look.
My question to the Honourable Minister is that of any real benefit us as Zimbabwe. We look at the standard of living, we look at the cost of living for everyone is deteriorating on a daily basis. And we look at spending capacity of all these, it has been adversely affected. You look at the real wages, in terms, they have actually declined. And my question to the Honourable Minister is that of any real benefit to us, or is it something which is just meaningless and which is not of any meaning to us? Can you clarify how the people of Zimbabwe are benefiting from this surplus, which is always harping about?
Honourable Minister. Thank you, Speaker, sir. The benefits for the surplus are as follows. The benefits are as follows. One, having a surplus stops growth in money supply, which in the long run will contribute towards stabilization of inflation. Secondly, the surplus is being used to cushion civil servants in terms of wages. In January, we gave them a cushioning of 63 million. From April 1 to December, 400 million. Now, number three, we're using the surplus for social protection programs, Mr. Speaker, sir. Start with the cyclone Idai. We've allocated 100 million towards that. But also, we're using the surplus for the usual social protection programs, such as the program in both rural and urban areas, and also supporting other social services such as being in the education sector, the health sector. And then, in addition to that, the Speaker said, we're going to use the surplus for importing food. We already issued.
Now, if you've got a surplus, why haven't you given the civil servants a very meaningful increase? $29 is what the average civil servant got, not the millions he's talking about. It's $29. Can the Minister answer in simple language for us?
When we think of salary adjustments, we never benchmark to an exchange rate to the US dollar, in which case he has used actually a parallel market rate of 1 to 8. We don't do that. We try to benchmark salaries to inflation level, and that's how it ought to be done. Secondly, should we give civil servants an increase in line with the exchange rate that he mentioned? The answer is no. What we'll consider, we need to engage them, is increases that begin to ameliorate against the current levels of inflation, and we continue to engage them so we can adjust their emoluments both in monetary terms and in non-monetary terms. I thank you.
As the fuel crisis deepens, government has come in strong and warned operators within the fuel retail sector to hold prices constant, citing issues to do with the letters of credit that have been extended to the retailers at a rate of 1:4 1:4.6 against the United States dollar. Well, it was not business as usual at some of the fuel stations had fuel, but most of them seemed not to be issuing the fuel at the fuel stations. Well, our Equity Access team was on the ground, and as you can see from the footage, it was not business as usual. As we make progress as we move off how the figures actually stand up to this point. So this here is the total for 2019 vis-a-vis the total for 2018. And of course, the last column is the 2018. This is where this is what explains what we are actually seeing in terms of the volume and the value. In terms of the pricing, for last year, average price was $2.87. But here, the price is $1.82. Resultantly, we have seen farmers actually withholding some of their stock, expecting an adjustment with regards to the price. But it remains to be seen how the story actually plays out if there is no change with regards to the pricing issues that have embattled the tobacco auction floors. In other business news, MTN is set to launch a new application which is called Marketplace app, which will sell everything from clothing items, electronic gadgets, right up to financial services as far as insurance. Of note is the fact that MTN is looking to establish Africa's biggest bank within the fintech space, leveraging on a subscriber base of over 233 million users between Africa and the Middle East. The corporation is seeking to have 60 million users through its mobile application, which will be called Momo. This concludes our evening news bulletin. Up next is a look at the news. Don't go anywhere. The show.
Thank you, Eben. How are you doing today?
Won't complain. Should only get better yourself.
I'm all right, thank you. Just a little bit chilly.
Beautiful. Let's get into the details. Yeah.
Well, for today we had 25 counters that did exchange hands on the local bourse, down from 27 the prior session. Of those 25, we had 20 that were bulls and none appeared to be a loser or a bear, in other words. Now, what that shows for us on our aggregates is that the all share index was up 8.29% and the industrials index was up 8.25%. For that index to settle at 640.29 points, which is 31.45% ahead of its year opening level. Now, a little bit, if we zoom in a little bit more, we look at the mining index was up 8.27, but the top 10 index was the leading index again today, coming up 9.76% for it to settle at 190.24. Pushing that average was the Econet and Cassava performances that have been pretty much doing very well in the past about 6 to 8 sessions, with both Econet and Cassava coming up 16.14% and 16.87%. Now, these two counters are expected to release and actually do have an analyst briefing tomorrow, where they should be publishing their financial results and giving us an insight of how their businesses have been going. Now, if we just have a look at some of the counters on a year-to-date basis, Old Mutual is now up 57.64%, while Padenga is up 67.64%. Now, these gains are okay, but then if we look at if we then hedge some of these gains versus inflation rates, we may be for some of these counters we may still be in a little bit of a loss in terms of returns on the investment. Now, some of these returns are obviously being slimmed down by the massive gains that most of these counters have been experiencing in the current period, where a lot of inflationary hedging has had a lot of play in that market. Now, all share index is now 23.64% ahead of last week's level, while the mining's index is up 12.91%. Top 10 index showing its strength by being up 29%.
But I mean, all the four indices are actually up.
Yes, all four indices are up. Like I did mention just a few seconds ago, that a lot of inflationary hedging has caused for these aggregates to actually go up. I mean, if you look at today's session, we had all risers and no fallers. 25 counters traded, 20 were risers, 5 were sitting stable. That should show you a lot about how investors are really showing some confidence in putting and storing their value in the stock market. Okay. So with this inflationary hedging that is taking place, there's also precedence of exchange rate losses that they are trying to run from, that have been occurring on the alternative market, which is the forex market. Now, the forex market hasn't performed very well lately. It is now above 100% weaker than it was when it was introduced on an interbank basis. Now, Turno, just to give a highlight of our rises, Turno, Zimmer Holdings, Bindura did extend on their gains from prior session, while CBZ and OK then capped the top 5 rises, coming up 17.28 and 17.05% on that set. Now, for the forex market, like I did mention, that this market has had a very huge play in how investors are playing on the stock market, because some of the inflationary pressure that is coming onto them is coming from the forex market. Now, the forex market has a play where a lot of retailers do have a good number of products that are imported, and a lot of producers in Zimbabwe have an import aspect in their produce. So with all of that import aspect within it, a weakening exchange rate means that they do need a lot more RTGS dollars for them to produce, which then pushes the prices up, and such a pressure does cause for investors to then move out of those, move into the stock market and move out of other alternative markets that they could actually be trading in.
Finance Minister has said that they expect a convergence between the parallel market rate as well as the interbank market rate. Are we drawing anywhere close to that very quickly?
I don't think we'll be drawing anywhere close to that. I think it will be a white elephant where you would find that the parallel market will always maintain a certain level of premium ahead of the interbank. We were having a small discussion earlier on with a couple of my other analyst friends. We did have a look at how last week there has been a trade of about $40 million on the interbank rate, which should translate to about 8 million a day. And it hasn't really taken into effect. Now, the interbank market has had a backlog of almost close to about $700 million. And for that backlog to be covered, there needs to be much larger trades that are happening on that market. And then once that backlog has been met, then probably we can start talking about a strengthening exchange rate, because of how that backlog is still going to keep supply in deficit and demand in excess in that market. So with that difference between the demand and the supply, it will still keep the interbank rate weakening. Also, other factors would be that most of the people that are actually having access to the interbank rate are only large players within that market, where the RBZ has really put some stringent measures as to who necessarily needs the foreign currency that they are applying from their local banks, and when they do get it. So you would find that the masses of the population that are actually in need of foreign currency would then prefer using the parallel market rather than the interbank, which then pushes the differences in the demands and supplies of how those two markets are actually moving in a parallel rate, and then causing for that discrepancy there.
Oh, thank you for the elaborate explanation there. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From the Equity Access team and I, Danki and Asante Sana.